Welcome to the Gentle Ledger. Today is Wednesday, February 4th, 2026, and the market feels like a conversation that suddenly turns reflective, not silent, just reconsidering what it thought it already understood. Now, let's turn softly to the U.S. indexes, where today's session showed a clear divergence beneath the surface. The Dow Jones Industrial Average rose plus 0.5%, adding roughly 260 points to close near 49,501, supported by steadier sectors beyond technology. The S&P 500 slipped minus 0.5%, settling around 6,883, weighed down by continued pressure in large technology and software companies. The Nasdaq Composite fell more sharply, down minus 1.5% to approximately 22,905, marking a second day of notable weakness in growth shares. The Russell 2000 also declined, down minus 0.9% as smaller companies followed broader risk sentiment rather than leading it. The message was clear. Investors were not leaving equities entirely. They were moving within them. Gently moving into the corporate highlights, the day's narrative centered on a sudden reassessment of AI-linked valuations. Advanced micro devices dropped about minus 17.3%, one of its steepest declines in years, after a cautious revenue outlook overshadowed otherwise solid results. Nvidia fell roughly minus 3.4%, and Alphabet slipped about minus 2% during the session ahead of earnings. Software names joined the pullback. Palantir declined nearly minus 12%, while Snowflake and Datadog also traded lower amid broader sector concern. But the tape was not uniformly negative. Hardware infrastructure demand remained strong. Super microcomputers surged about plus 13.8% on AI server optimism. In healthcare, Eli Lilly climbed approximately plus 10.3% after projecting strong profits tied to its diabetes and weight loss therapies. Consumer internet also found pockets of strength. Match Group rose about plus 5.9% following improved engagement features. Even in a down Nasdaq day, selective confidence was clearly visible. Overseas, in Asia and Europe, the mood carried across gently but with regional personality. In Asia, Japan's Nikkei 225 fell about minus 0.8%, reflecting sensitivity to global technology sentiment, while South Korea's Kospi rose roughly plus 1.6%, buoyed by domestic semiconductor optimism. China and Hong Kong markets traded mixed as investors balanced local policy signals with global tech concerns. In Europe, the FTSE 100 finished higher and even approached record territory, supported by insurance and energy names, while the StoxX 600 and DAX moved modestly upward as investors rotated toward traditional sectors. In commodities and bonds, the story softened and steadied. Gold rose toward $4,950 per ounce, recovering some of its recent volatility as investors sought partial shelter. Oil prices held firm near the mid-60s per barrel, reflecting geopolitical awareness without urgency. In fixed income, the U.S. 10-year Treasury yield eased slightly to around 4.27%, a quiet signal of investors balancing risk rather than abandoning it. Turning now to the newer corners of finance, in crypto land sentiment echoed the equity shift away from high growth expectations. Bitcoin slipped to around $76,000, down roughly 3%, while Ethereum moved lower alongside technology stocks. Digital assets today behaved less like rebels and more like reflections, another mirror of risk appetite adjusting to uncertainty. As the day settles into evening, let's rest in the reflective summary and outlook. Today felt less like a sell-off and more like a reconsideration, a market testing whether excitement had run ahead of evidence, leadership rotated, confidence redistributed, and expectations softened into something steadier. Tonight, let that steadiness carry you gently into rest, attentive, balanced, and grounded in the quiet understanding that markets, like conversations, evolve. Good night.